Hi, my name's Cameron Kusher, and I'm here today to give you an ACT housing market update and economic outlook. We're going to start, though, with an economic outlook and look at how the economy is performing. And economic growth at the moment is incredibly weak. Over the last 30 years, economic growth has averaged 3%. Over the last year, we've seen the economy grow by just 1%. On a per capita or per person basis, the economy has shrunk for 6 consecutive quarters, and it's fallen 1.5% in the past year. That's something we've never seen, that 6 quarters of per capita GDP decline. And it speaks to the fact that the thing that's really growing the economy at the moment is how many people are coming into the country, and that's holding up demand to a higher level. But at an individual level, things are very weak. Inflation has been the nation's biggest headache over the last few years. So the Reserve Bank targets an inflation rate of between 2 to 3%. And you can see at the moment, both headline and underlying inflation are above that level. It's expected that over the next few quarters, annual headline inflation will fall back into the target range. And that's mainly because there's a lot of rebates and subsidies being offered up by state and federal governments. And that will bring down things like power costs, and we'll see headline inflation dip back into where it's supposed to be. But underlying inflation will be what the Reserve Bank is watching, and it's unexpected to fall back into the target range until late 2025 or early 2026. That headline inflation dipping back in will probably jump back out as well once those subsidies are removed. So because inflation remains a challenge, we've got the highest interest rates we've had in 12 years. Now, it's looking less likely that we're going to get any further interest rate hikes, but the Reserve Bank governor has said that she doesn't expect interest rate cuts until next year. And at this stage, most people are expecting that those cuts will come in February. And I think we'll get several other cuts throughout 2025. In the ACT, the labour market is quite strong. The unemployment rate at the moment is 3.9%. Nationally, it's 4.4%. So we are seeing a tighter labour market than we are nationally. But we are seeing slower growth in employment. Employment only grew by 0.8% over the past year in the ACT. It's up about 1.5% over the past year nationally. If we look at the lending environment, we're seeing subsequent buyer lending, so that's upgraders, downgraders. It's up 4.2% over the past year. Nationally, it's up about 14%. First home buyer lending's up 6.8% over the past year. Nationally, first home buyer lending's up about 11%. And lending to investors is up 14.5% over the past year. Nationally, it's up around 30%. So the demand for housing finance is somewhat weaker in ACT than what we're seeing elsewhere in the country. There's still a lot of challenges around building the housing that we need, although ACT is doing a reasonably good job. But we've seen a big increase in the inputs into housing construction, so that's the materials, and the outputs, which is actually building the housing. So since the pandemic started, the input costs are up about 34%. You can see, though, that escalation has really slowed. It's only up 1.1% over the past year, which is encouraging. But we're seeing output costs starting to lift again. So output costs for houses are up 4.3% over the past year. They're up about 45% since the beginning of the pandemic. And then for other residential, which is higher density housing, those costs are up 7.7% over the past year. And you can see that it is escalating at the moment. Those costs are only up about 25%, though, since the beginning of the pandemic. But the problem here is all of these costs are built into the end price. So we're seeing a wide premium for new housing over existing housing, and that's seeing buyers preference buying an existing home. And it means we don't get the housing we need delivered. Now, the ACT is probably doing a better job than somewhere else, some of the other states and territories. You can see the commencements for new units, they're very volatile, but over the March quarter, still 1,000 new units were commenced. We're not seeing a lot of new houses being built at the moment. We're seeing, commenced, but we are still seeing a lot of housing overall under construction, but that pipeline behind has really thinned out quite substantially. And at the same time, we've seen the population increase at a fairly rapid pace, mainly in ACT from net overseas migration. You can see there it's been at a historic high over the past year. It is starting to taper off. The other thing that's tapered off is net interstate migration, which was quite positive during the pandemic. but you can see the ACT is now losing more people to other states and territories than it's gaining. Let's have a look at the housing market and what's happening there. So over the past quarter, we've seen prices rise by 0.1% in the ACT. Over the past year, prices are only up 0.4%. So we've seen price falls in both Hobart and in Melbourne over the past year. Every other capital city has seen prices rise, and amongst those capital cities, Canberra has seen the weakest price growth. One of the reasons why the Canberra market's not as strong as what we're seeing elsewhere is there's a lot more stock available for sale. So the number of new listings in Canberra this year was up 4.3% from a year ago. And if you compare to that red line, which is the 5-year average over 2018 to 2022, you can see that there's a lot more stock than there has been on average. And similarly with total listings, they're up 22.4% from a year ago, and they're well above that 5-year average. So for someone looking to buy a property in Canberra, there's quite a lot of stock already on the market, and there's quite a lot of stock coming to the market, and that takes away that fear of missing out from buyers. In terms of sales, though, sales are, even though there's more stock, we're still seeing good transaction activity. The number of sales in August this year was up 9.3% from a year ago, and it was the most sales we've seen in August any year since 2019. In terms of the demand, we measure that by inquiries per listing, and they are lower than they were a year ago. We're looking at about 4.9 inquiries per listing, down from 5.4 inquiries per listing a year ago. Inquiry levels have certainly dropped from where they were back in 2020, 2021, and they're back around the levels they were at pre-COVID. And as a result of that more stock, we're seeing properties taking longer to sell. So the median days on market in Canberra was 35 days. That was up from 28 days last year. And you can see again, that 5-year average to 2022 was 29 days. So properties are proving a little bit more difficult to sell in the market at the moment. In terms of the housing market outlook, broadly, the last few decades, we've seen really strong price growth, and it's been driven by interest rates falling, which has boosted borrowing capacities, credit becoming more available to access, which has boosted borrowing capacities. Over the last 10 years or so, credit has become harder to access. And we've seen employment participation rates lift significantly, mainly due to more women joining the workforce. And again, we're probably not going to see a big boost in workplace participation. And when we did get that boost, it lifted borrowing capacities as well. So the outlook is that price growth in the housing market is probably going to be slower going forward than it has been over recent decades. Even though we have seen quite a lot of stock come to the market, we're still seeing strong demand. Yes, inquiries have fallen, but sales volumes are the highest they've been any year since 2019. So things are holding up pretty well. That lift in the volume of stock for sale, though, has led to this slowdown in price growth because people just have a lot more choice. And people don't have that fear of missing out. So vendors need to be very realistic on their price expectations because buyers can be more selective, buyers can wait. There's a sense that even if I miss out, something good is going to come to the market soon. That high cost of new housing is likely to continue to see people showing a preference for existing homes over new homes. It's also likely to see people preference properties that don't need a renovation to those that do because they incur all those costs as well. We need more infill housing. Canberra's doing a pretty good job at adding more density, but obviously there's more that needs to be done in those established markets. And I think the high cost of renting is likely to see people that have the capacity to do it to become first home buyers. Now, that's a limited share of people, but especially as interest rates start to fall, I think a lot of people will be looking to get their own home and getting out of the rental market. And speaking of the rental market, we'll take a quick look at it now too. So over the past year, rental growth has been fairly moderate. You can see house rents are up 5.3%, unit rents are up 1.8%. Canberra, of course, is one of the most expensive cities to rent in. So only Brisbane, Perth and Sydney are more expensive places to rent than Canberra at the moment. But we've certainly seen a flattening off of that rental growth over the last probably 12 to 18 months. Rental yields have dropped quite a long way. They are rebounding because property prices are still lifting, but rental growth has been a little bit stronger. But you're probably not buying a house in Canberra for the rental yield, but rental yields on units are reasonably attractive. We're starting to see, in terms of new rental listings, a little bit of a moderation compared to last year, and in terms of total rental listings. But you can see both of those compared to their 5-year average, there is quite a lot of stock available for rent in Canberra, which is giving people a lot of choice. And although there is more choice, we have seen a little bit of a ramp up in inquiries per listing. They're up 7.4% from where they were a year ago. But Canberra has the highest vacancy rate of all capital cities, with a rental vacancy rate at 1.9%, which is great for renters. I guess the conversations you need to be having with your landlords are, there's a limit to how much we can put up rents in this market, because people do have a lot more choice. And we're seeing that also reflected on the rental days on market, which is higher than it was a year ago, and it's well above that 5-year average. So Canberra is probably one of the easiest places to rent in at the moment across the country. In terms of the rental market outlook, we've seen rent prices over the last couple of years, although it has slowed off in Canberra, driven higher because household sizes reduced during the pandemic. We've had relatively low construction, and we've had a rapid rebound in population growth, mainly from migration. We've seen a moderate growth in rents over the past year, and that rate of growth has slowed. That's on the back of supply increasing quite substantially, and if that persists, we might actually start to see some rental falls over in the not too distant future. The capacity to afford rent for a lot of people is a challenge, because rental growth has been much stronger than wage growth, and obviously inflation has been high and the cost of everything has gone up. So people are reacting by renting in less ideal locations, moving into smaller properties, or a trend that we're seeing a lot of is people going into share housing, whether that's bringing someone into their house to share, or moving back into a share house just because they simply can't afford the rent by themselves. How do we address the rental shortage? Well, I think Canberra's kind of the model for what we need to do. We need more supply. That does take time. We need more people investing in residential property, because they do add to that rental stock. In terms of demand, the federal government's talking about a cap on students. That's a way to lower migration. Whether that works or not remains to be seen. You can help people on lower incomes with rental assistance, and the federal government's done that 2 years in a row, but that was after 20 years of no one touching rental assistance, essentially. So there's more to be done there, because lower income households are most at risk of falling out of rental properties. And the other thing you can do is try and help first home buyers get their own home. And there's a lot of schemes that do this. The challenge for a lot of people renting is it's hard to save any money at the moment. So people can't save a big enough deposit to exit the rental market. I do think, though, that we will see more renters exiting the market and purchasing, especially as interest rates come down. Nationally, there's a bit of an expectation of further increase in rents, maybe not so much in Canberra. You've already got those high vacancy rates. You've got a lot of stock. But again, as interest rates come down, we may start to see more people investing in property again. So that brings me to the end of the presentation today. Thank you very much for your time, and I hope you have a really successful spring, and I hope this has helped you. Thank you.